2021's biggest bull is less than 1% away from achieving his 48.25 year-end target, but he doesn't plan on celebrating. He is concerned now about a tough road ahead. Chris Harvey is the head of equity strategy at Wells Fargo Securities. Chris, good to have you with us. I'm not going to ask you about your acronym. You're worried. I mean, that's basically your word. But so why?
So, Melissa, that's right. We've been a bull into year-end. We thought there'd be a melt-up, but now it's time, as we look at the landscape, for more sobering thoughts. And there's probably 2, 3, maybe 4 reasons. The first I would say is if you look at multiples, we're at peakish multiples on top of peakish growth. That's not really bullish. If you look at the consumer, no doubt the consumer is in fine shape, but we think the consumer spending is going to normalize next year. Then it's about the mentality. There's this pervasive mentality that the market can bend but can't break. We do expect a 10% pullback next year, either in 2Q or the beginning of the summertime. And the last thing I would say is we're late in the cycle. Funny things happen late in the cycle. And what we expect to see is multiple compression, whether it's due to deceleration of growth, the Fed getting more aggressive, or maybe what we're going to see is a peaking of pricing. And that could lead to a peaking of multiples and, of course, a peaking of margins. So we're a lot more conservative this year. We want people to think about the risk side of the equation first and then the return side.
So, Chris, you just mentioned the peaking of multiples here. And when you think about the broad market, we know the concentration in a handful of names. And it seems like a lot of investors have gotten very comfortable with paying, historically like 15, 20-year highs in names like Microsoft and Apple and even Alphabet here. Does that concentration in the outperformance in those handful of names, and then throw in an NVIDIA, which is up over 100% this year, trading at a very high multiple of sales and earnings, nearly $1 trillion in market. Do they worry you? And why wouldn't we see a 10% peak to trough decline sooner than Q2?
Dan, you make some really good points, and it does concern us. We're starting to see things that we saw in the late 90s, the concentration. The other thing that we're seeing is if you look at the consumer's balance sheet, if you look at the net worth, 24% of their holdings are in stocks. The last time we saw something even close to that was the late 90s. And the early 2000s didn't work out so well. So we're very worried about that. And we're also very worried about pricing. For the first time in a while, we're getting some anecdotal information that the consumer's not the same price taker that he or she was 6 and 12 months ago. And if they're not, if they're more price conscious, again, that gets back to multiples and margins, and we have a problem going forward.
I get the concern about stocks. That's something that I found very, very interesting, Chris. But at the same time, the consumer also has a lot less debt than probably that same period at the time. And I'm wondering if that factors in at all, that just overall the consumer's in better shape. So even if he or she feels a dent in the portfolio, they're not relying on that money to pay off any credit cards or anything like that.
Mm-hmm. Yeah, Melissa, I think you're right. And what we're trying to say, and maybe not saying it perfectly and not so eloquently, is we don't think the wheels are going to fall off the cart with the consumer. What we think is there's going to be a repricing. And what we have to think about is that normalization of spending, that normalization of the balance sheet, that normalization of risk appetite, and what that does to multiples, potentially what that does to margin. And that's why I think we'll have some sort of pullback. And Dan's right. Maybe I'm not aggressive enough. Maybe it happens sooner rather than later. We do have a lot of froth in the marketplace, and you can see it everywhere. Mm-hmm. One of the things we always point to is naming of stadiums. Staples Center is no longer going to be the Staples Center, but crypto.com. We're beginning to see mayors say, I want to take my salary in crypto. And we're beginning to see, again, that mentality that the market can bend but never break. And that's troubling.
All right.